Welcome. Today we'll be talking about impact of GST on bank. Impact of GST on banks and NBFCs. GST has impacted the service sector. More specifically, financial services based on funds and insurances, non-banking financial company, NBFCs and banks are impacted the most. Service tax has changed from 15 to 18% after GST. Under GST, banks and NBFCs need to get registered for each state they work into. Leveraging and De-leveraging ITC. Under the pre-GST regime, banks and NBFCs had the option of reversing SENVAT credit availed on input and input services. Reversal of SENVAT credit was not applicable. However, under GST, SENVAT credit on inputs, input services, and capital goods have to be reversed compulsorily. Adjudication and Assessment. Under GST, all registered branches of banks and NBFCs need to justify its position as per its chargeability in a respective state and a valid reason for using ITC in different states. What are the transactions subject to GST? Loan. Loan being money-to-money transaction is not subject to GST. Moreover, the interest that is to be charged on loans is also exempt from GST. However, if the bank charges penalty or interest fee on loan repayment, such charges will be subject to GST. Similarly, late payment charges on credit card and exit load charged on the mutual funds will also attract GST. Lease. Lease in financial sectors can either be a supply of services or supply of goods, which will attract GST at the rate similar to the assets that are leased out. Hire purchase. Hire purchase transaction is charged at the same rate at which hired asset charged under GST. We hope you found this video useful and always remember, tax se mat daro, H&R Block ke saath chalo.